Good morning, this is Bloomberg Daybreak Europe. Happy Monday. I'm Tom McKenzie in London. These are the stories that set your agenda. Canada backs down, dropping its digital services tax as it looks to restart trade talks with the US. Meanwhile, a deal on UK car and aerospace exports comes into effect, slashing tariffs. Global stocks push higher on optimism then that trade talks will yield agreements before the end of the 90-day tariff reprieve next week. Plus, power under pressure. Europe's farmers and energy providers feel the strain as a heatwave pushes temperatures as much as 10 degrees above average. European futures then pointing higher by around, 0.3% after punching through with gains of more than 1% by the close on Friday. Looking to build on that momentum, the trade progress seems to be there as we head towards, of course, that July the 9th deadline. Here in the UK, FTSE 100 futures currently flat. S&P E-minis pointing to gains of 0.4% after the first record that we've seen since February. The S&P 500 closing above 6,100 by the close on Friday. And looking to add to that today by 0.4%. Nasdaq 100 futures also in positive territory, gaining 117 points. Let's flip the board and have a look across asset. The dollar really stood out to me when I checked in on moves around the currencies just in the last few minutes. Euro dollar then higher on the back of the dollar, weaker dollar story once again. The dollar down around 0.3%. 117 on euro dollar, gaining 0.1% then for the single currency. The 10-year at 4.28. The big data point, of course, of the week is non-farm payrolls dropping on Thursday this week. $67 a barrel and 63 cents on Brent, down 0.2% on continuing easing of that geopolitical tension. And gold at 3,285 per troy ounce, up 0.3% on the yellow metal. Let's cross over to Asia markets right now. Min low standing by in Hong Kong, and some data coming through on China from the manufacturing front. Min.
Yes, the PMI data just out from China this morning and beating expectations on both manufacturing and non-manufacturing. But there you go, 49.7 for the manufacturing PMI, still below that 50 threshold, indicating a contraction, although slightly better than the previous month. And it indicates that so far there is still some of this lingering uncertainty and worry that maybe that trade truce could expire in August. That 55% tariffs on Chinese goods, at this point, it is still not clear if those tariffs are going to remain the same through the rest of the year. Both sides, US and China, have not been explicit whether that is part of the trade agreements that they have signed. And we're seeing the reaction here on Chinese markets. If we flip the board, I believe it's looking pretty mixed today. Onshore, slightly better than offshore. We did see a move on the offshore yuan as well, stronger by about 1% or so, thanks to the PBOC today, setting the fix stronger than expected. And that's in reaction to the softer dollar as well. Flip the board, take a look at how broader Asian markets are doing, and we are seeing the regional benchmark up about 0.2%, led by the Nikkei. It's now about 0.8% higher, losing some of the gains. That it was about 1.7% or so up earlier this morning. And there has been some of this optimism because of Japan's top negotiator extending his stay in Washington, trying to wrap up those trade talks before the July 9th deadline. So there was a bit of hope that maybe we could see some outcomes from those talks. But flip the board, take a look also at some of these stocks that we're watching. The Japanese car makers today, all in the red. That's because President Trump mentioned that the auto trade with Japan has been unfair, and he is considering keeping in place those 25% sectoral tariffs on the Japanese car makers. And you see the likes of Mazda Motor off by about 3% or so today.
OK, minimum low in Hong Kong with a check in the markets in that region. Thank you. To the trade story now. Canada's finance minister says it is rescinding its digital services tax in anticipation of a comprehensive trade arrangement with the US as both countries work towards a deal by July 21st. Earlier, President Trump said the US holds all the cards in those negotiations.
Canada has been a very difficult country to deal with over the years. We here in Canada, we have a great relationship with the people of Canada, but it's been very difficult. And they put a charge, and they were a little bit early. We found out about it. So, and we have all the cards. We have every single one. We don't want to do anything bad, but they have economically, we have such power over Canada.
Well, joining me now is Bloomberg's Jill Deesis. Jill, Canada, India and Japan then have all been negotiating with the US. Where are we on those conversations?
Well, Tom, we'll kind of take them one at a time here. So, as we've just been discussing on Canada, I think the removal of that digital services tax, while some may have argued that that was actually a point of leverage for Canada in any trade negotiations with the United States, removing that off the table does seem to have opened the door maybe a little bit more for the U.S. and Canada to negotiate a deal. I think it's pretty, it's important to note that this kind of leaves the path for Trump and the Canadian Prime Minister Mark Carney to talk about something maybe before July 21st. Notably, that's a week or so after that July 9th deadline that Trump has been talking about getting all of this sorted. So really, that's one to watch. Although obviously earlier this year, Trump really kind of made a point of going after Canada. So I think we'll have to see kind of how tensions evolve between those two border nations as they try to work toward an agreement. When you're looking at India, obviously another really critical one to look for. We know that Indian negotiators have been in Washington trying to work through a potential deal before you hit that July 9th deadline. Trump has even kind of floated the idea of maybe something coming on India. So that does seem like it's something that may be a little bit closer in the works. And then Japan, I really think, Japan is a really tricky one. And I'm not sure Japan is in the best position. Obviously, Min just kind of walked through that while the broader Nikkei is up. You're looking at some of those Japanese automakers are down because you've got Trump kind of musing on the idea of maybe not removing that 25% auto tariff. I would also say that while, Japan negotiators are still in Washington trying to work through something, I think it's a bit telling that at the recent G7 in Canada, Ishida and Trump didn't really get a meeting on the table to try to come to an agreement on something. So I think that kind of leaves, Japan in the lurch a little bit. Maybe they create something before that July 9th deadline that Trump has set up, but I'm not sure there. I really think that it does seem like there's a lot of daylight between the U.S. and Japan right now on reaching some kind of an agreement.
Yeah, the key auto sector and 25% imposed, of course, central for Japan. And as we think about the auto sector, and of course it is a much smaller auto sector, a much smaller part of the economy here in the UK, but the UK-US trade deal was largely shaped around the need to relieve tariffs on UK cars. And that deal is now in force. It came into force at 5 a.m. UK time. Tariffs now at 10% on autos.
Yes, that's right, Tom. And I think that at least, maybe there's a little bit of a relief there when you're looking at that UK auto sector. But for me, the UK-US trade agreement, the big omission there was that you didn't see the UK and the US negotiate anything to kind of remove that 25% sectoral tariff on steel. That was still a huge part of the situation and still part of, that ongoing negotiation between the Brits and the Americans. I think that, this kind of shows that the UK has become a little bit of a cautionary tale for some of these other nations that are trying to negotiate trade deals with the United States, because that July 9th deadline really does refer to those reciprocal tariffs that Trump announced on his big Liberation Day, looking at that country-by-country tariffs. And, that doesn't really include some of these sectoral tariffs on issues like on industries like steel, et cetera. The big issue there is that a lot of those sectoral tariffs were kind of imposed under a different mechanism in the United States for creating trade barriers and trade tariffs. Part of the issue there is that those might actually be, from the domestic side in the U.S., a little bit more difficult to challenge versus some of Trump's executive orders. So I think if you're a lot of these countries looking at the UK right now, they didn't manage to get something over the line, specifically addressing some of those bigger steel tariffs. And so if you are, as we were just discussing, Canada or an India or a Japan, and you're trying to reach a trade deal sometime within the next month or so, I think that there's still a lot on the table that needs to be examined with whether you're still impacted by some of those sectoral tariffs, whether you lose any leverage by negotiating something a little bit earlier, and then ultimately whether the U.S. Commerce Department decides to bring down additional sectoral tariffs that may affect industries that fall under your remit. So I think that those are all all of this, Tom, is kind of leading to this bigger issue where there's a lot of uncertainty with how a lot of this is going to come together. Obviously, the next week is going to be incredibly critical, but we still may see things kind of trickle out past that July 9th deadline.
Okay, really important in terms of breaking out the potential sticking points on sectoral tariffs as these negotiations continue. Bloomberg's Jill Deasis with that important update. Jill, thank you. Now, the US Treasury Secretary Scott Bessent will be speaking to Bloomberg later. You can catch that conversation at 2:30 p.m. London time. And the Canadian dollar is up on news of the resumption then of trade talks with the US, as Jill was breaking down for us, of course, in terms of the removal of that tax threat was meant to kick in today in terms of the digital services tax in Canada. Let's get more from Bloomberg's Valerie Teitel in terms of the market reaction to the Canada fold.
Oh, look, the Canadian Loonie has had a decent round trip in the last two sessions. On a Friday, when Trump threatened to end those trade talks, we saw the Canadian Loonie weaken by 0.8% in a matter of moments. We've marked our way back there since that. Now that we've heard from Canada, they are dropping this digital services tax. So on a two-day look, we're only 0.2% weaker in the Canadian Loonie. But while we're talking about FX, Tom, we have to mention what's going on with the euro. It is on a heck of a winning streak. 7 straight sessions of gains for the euro. It marks the longest streaks of gains since 2017. It's been 8 years since we've seen 7 straight sessions higher for the euro dollar, up 2% in the last 7 sessions. A lot of this is to do with the dollar weakness on the back of all of these Trump comments, really bashing Powell, getting the market to believe that a more dovish Fed replacement is going to be due soon. But not only do we have U.S. data to contend with, we have the tax bill that's making its way through the Senate and those trade negotiations going on. But it's a busy week when it comes to U.S. data. Not only do we have non-farm payrolls on Thursday, we also get ISM manufacturing and ISM services and a lot of data around the U.S. Labor market. JOLTS ADP rounding it out with NFP a day early on Friday due to the shortened week.
OK, a busy week in terms of data in just that 4-day week, of course, for the US markets. Bloomberg's Valerie Teitel, thank you very much indeed. Let's look at what else to think about today, then, with the data dropping in terms of inflation out of Italy, 10 a.m. UK time. We're going to get Italy CPI data. At 1 p.m, we'll get the German print as well on consumer prices and the CPI picture out of the Eurozone's largest economy. And at 8 p.m, Christine Lagarde, of course, of the ECB will be speaking in Sintra. Bloomberg is on the ground, of course, for those conversations. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go with a big focus, of course, in terms of the developments on trade and Canada and the US, clearing that obstacle to further negotiations. Coming up, the rush to get Donald Trump's big, beautiful bill passed before Independence Day on July the 4th. The clock is ticking down. The focus is on the Senate. We discuss that next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
There's this feeling that labor market is contracting.
There's some risk that layoffs are growing.
Medium-term outlook is the economy should be fine.
This Thursday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The weakening trend continues.
This is a trend. We're seeing declines.
If you're not with a job right now, it's harder to find a new one.
The June Jobs Report, Thursday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, Senate Majority Leader John Thune is rushing to push through President Trump's multi-trillion-dollar tax and spending bill by July the 4th. The bill's fate remains uncertain due to opposition from about 8 Republican senators. Joining us now is Bloomberg's East Asia government editor, John Herskovitz. John, does Trump then have the votes? Do they have the votes in the Senate now to pass the bill? This has been working through the motions, and it continues to as we speak.
No, exactly. It's Trump is close, but he's also cutting it very close. So the Senate balance is 53 seats for the Republicans. They have 8, as you said, who voiced some sort of opposition, 2 who are likely in the no category. Senator Rand Paul of Kentucky is a no, saying that he sees this bill as fiscally irresponsible for the way that it increases the debt in the U.S. We had Tom Tillis, who's voiced his concern about what this will mean for people with health insurance, Medicaid, and also for rural hospitals, which he sees a cut in funding happening, which would really hurt hospitals in his state. So we have some fiscal conservatives who don't think that the cuts are enough. We have some what are considered moderate Republicans, such as Lisa Murkowski of Alaska, Susan Collins of Maine, who are also concerned, have the same sorts of concerns as Tillis about Medicaid, and also what this will do for rural hospitals. We have some concerns about the removal of subsidies for clean energy, which could hurt some industries in their states. So there's a lot going on. It's close, and the math is there. If we're at 50-50, J.D. Vance, the vice president, cast the deciding vote. So it would have to be 4 defections for this bill to be sunk.
Okay, just four defections. In terms of the mechanics then, John, in what to watch as this works its way through the Senate and whether or not this will actually get to Trump's desk by July the 4th, what are we watching for as you weigh up those debates that, of course, are taking place on both sides of this Republican Party now?
Sure. The concerns are really about these issues of whether it will help. If it'll satisfy the fiscal conservatives who really want more cuts to Medicaid, or if it's going to worry the moderates if these things go too far. And also we have public opinion, which is siding against the bill. Pew Research survey showed that about 50% of Americans are opposed, 30% support. A Washington Post Ipsos poll showed even greater concern about it. About 60% show that they disapprove of the bill. So what we're looking at now is a lot of horse trading, see if we can get some of these yeses to nos. And we have, of course, all the Democrats and those who caucus with the Democrats are not going to be voting for this bill.
Okay. Bloomberg's East Asia government editor, John Herskowitz, in terms of what to watch for as, of course, that bill, that more than $4 trillion bill, works its way through, of course, the Senate, given those divisions as well as that debate continues. Now, some of the stories making the news, and this ties in, of course, to that debate around tax cuts and the removal of some of these subsidies. Elon Musk has slammed the Senate's latest version of US President Donald Trump's multi-trillion-dollar tax bill. The Tesla CEO called the cuts to electric vehicle and other clean energy credits, quote, incredibly destructive. Musk said the bill would destroy millions of US jobs and give, quote, handouts to industries of the past while severely damaging industries of the future. The head of the UN's nuclear watchdog has said it's possible Iran could be enriching uranium again within months. Rafael Grossi's comments contradict the US president's claim that American airstrikes on Iran's nuclear facilities completely obliterated them.
The capacities they have are there. They can have, in a matter of months, I would say, a few cascades of centrifuges spinning and producing enriched uranium, or less than that. But as I said, frankly speaking, one cannot claim that everything has disappeared and there is nothing there.
Meanwhile, the UK Prime Minister is working to contain a rebellion within his Labour Party ahead of a key vote tomorrow on his flagship welfare policy. Keir Starmer was forced to perform an embarrassing U-turn on plans to cut disability benefits last week. The vote comes a week ahead of the one-year anniversary of Starmer's election win. Coming up, the energy transition is adding lots of solar panels and wind turbines, but are we building enough infrastructure to get the power to the right places? We bring you some details and data next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the energy transition is adding lots of solar panels, of course, and wind turbines, and upending the economics of fossil fuel power. And then there is, of course, the grid. Bloomberg NEF's Peter Wool joins us now to discuss the investment needed in the network of cables and other infrastructure that actually links the generators and the consumer. So spending, Peter, is on the rise when it comes to the grid. Is more needed? Where are we in terms of connecting these power sources to businesses and homes?
So, yeah, spending is rising, but whether or not it's rising fast enough is really a matter of opinion. If you're looking at your bill, it's probably still rising too quickly. But if you're trying to hit net zero, it really isn't rising quickly enough. And I think the key thing to really factor in is it's not just about connecting renewables and more generation. It's, if you see the chart you've got here, we are firmly on an economic transition path where current spending is just meeting normal economic behaviour. We're not hitting that much higher net zero curve.
So that's the gap that we're seeing on that chart.
And every year you miss the target, you need to find time next year to fill in the gap. And it's not just the money, it's the grid equipment and skills aren't in infinite supply. So you will eventually reach a crunch where you just can't buy what you need. And that's not just about connecting renewables, it's about replacing aging infrastructure. So a lot of the cables that come to your house, 50, 60 years old, they need to be replaced if you believe in net zero or not, really. It's just they're aging out. And on the digital side, we've got to bring in new technology to make the grid smarter and make it work better. When it comes to benefit, I think in a way we all benefit because we get a more reliable grid. But when it really comes to brass tacks, it's the grid owners, the manufacturers, contractors, and the people who finance the debt. They're making the profits from this, and ultimately bill payers will pay for that profit.
What's happening in the UK? Where does the UK stand on this? And is there a lesson to be drawn from what's happening in the UK?
I think so, yeah. The UK is really at the leading edge. We've got ambitious 2030 targets. We don't have the same level of nuclear and hydro that other countries those targets have to really help us through the transition. So innovation's been key. And I think one of the two big lessons from the UK has been the regulator Ofgem very early on recognised that innovation spending should be recoverable spending. It shouldn't be at risk. And then they've really pushed hard, so the system operator NESO, on innovative market solutions to specify what you want to get what you need. And in this chart here you're seeing there's been a recent huge spike in synchronous condenser purchases, especially driven by the UK and Europe.
What does that mean?
What is a synchronous condenser? Yeah, so a synchronous condenser is really just a large spinning machine, and it consumes power to give us grid stability, whereas a generator generates power to give us grid stability as well. And that means that you have stability, but you don't impact the energy market, which means you can have stability without curtailing renewables. So it's a great net benefit. And how innovative markets gave us that is it really lets experts be experts. So the grid planners and operators figure out what the grid needs and how much to pay for it. Technology suppliers think, OK, can my technology meet that need? And then developers package together profitable projects to meet the need using technology. And away you go.
Interesting that the UK is leading on this front. When we think about what happened in terms of Portugal and Spain and this stunning power outage, what do we know about what the consequences of that are and what are the implications then for the broader industry as we think about grids and grid security?
I think we know quite a bit now about the event, but the sad thing is complex events don't really give simple answers. And I think a lot of people have been looking for that simple, oh, I can blame this, it's not my fault. And one of the key implications is that sort of blame game. To actually get to the bottom of a complex blackout and make sure it never happens again in the same way, you need open, honest, expert discussion, not people covering themselves and trying to protect themselves.
And is that happening, in Spain?
We'll see. So far, the two reports the team and I have reviewed, there's pretty much anyone operating on the grid that day, you could point a finger at them. A lot of things went wrong, but that's pretty typical. The focus for me hasn't been enough on what happens in the sort of weeks, months and years ahead. How did you get to that day?
Okay.
And a lot of that sits with operators, regulators, governments, as much as the technologies.
Okay. Peter, thank you very much indeed. Important context in terms of what to think about in terms of getting the grid up to capacity and having, of course, that resilience. Bloomberg NEF's Peter Wool. Coming up, we're going to digest what is going on in the markets with Muzinich's Tatjana Greil-Castro. We'll get some market calls in the next couple of minutes. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Canada backs down, dropping its digital services tax as it looks to restart trade talks with the US. Meanwhile, a deal on UK car and aerospace exports comes into effect, slashing tariffs. Global stocks push higher on optimism that trade talks will yield agreements before the end of the 90-day tariff reprieve next week. Plus, power under pressure. Europe's farmers and energy providers, they feel the strain as a heat wave pushes temperatures as much as 10 degrees above average. European markets are on the front foot. European 50 futures pointing to gains of 0.3% after rallying by the end of the close on Friday. Gains of more than 1% across European stocks and looking to build on that today. FTSE 100 futures are currently flat. S&P E-minis punched through a fresh record high by the end of the close on Friday, above 6,100 by the end of the close. Now looking to add 0.4%. Trade optimism is certainly part of the mix, as is pricing in cuts from the Federal Reserve. Nasdaq 100 futures looking to add 113 points. Let's flip the board and have a look cross asset. The asset at the moment for me is the dollar, down again by 0.3%. That's giving a lift to the euro, up at 117.34 right now. The single currency up more than 0.1%. The 10-year is largely unchanged at 4.28. Brent currently a little softer by 0.1% at 67.72. And gold is trading higher at 0.4% higher at 3,288 per troy ounce. Now, to the geopolitics and trade conversations. China's top diplomat kicking off a visit to Europe today. Foreign Minister Wang Yi's trip comes as Beijing seeks to improve ties with other trading partners, with its relationship, of course, with the US remaining tense and increasingly competitive. Let's get more with Bloomberg's Oliver Crook. Joins me round the desk this morning. Lay out the visit for us then, Ollie, the consequences, the importance of seeing Wang Yi, the Foreign Minister of China, on the ground in Europe.
Yeah, so he's going to go to Brussels, he's going to go to Germany, he's going to go to France, he's going to meet with the foreign ministers of all of those countries, including the High Representative Kaja Kallas in Brussels, of course. And this is the first sort of high-level meeting that you've had between the EU and China since the beginning of this new commission. And this is a commission that you'll remember was all about making Europe more competitive. And at the time when it was elected, it was China was enemy number one. You know, we didn't have the Trump administration. Trump hadn't been elected. And the real concern for the Europeans was the issues that they were having with China. Of course, historically, Europe has sort of played the diplomatic role with China in the G7. That has, of course, changed a little bit in the last couple of years. So what they're trying to do here is really re-engage the dialogue, have those sort of institutional contact with China at a time when the United States has been, you know, as the Chinese repeatedly say to everybody, an unreliable partner. The Chinese want to demonstrate that they are not that they can be counted on going into the future. Of course, the main issue they're going to have to deal with right now are these magnets, rare earth magnets, which we've seen exports just contract all over the world for with their trade spat with the United States. The Europeans are affected too, and they're hoping to get those sort of going again because, of course, it's crucial for the car industry.
Yeah, OK, so the trade, the rare earth magnets and how that plays into the broader trade conversations will be in focus. Will Wang Yi find friends in Europe? How much division is there in terms of how much proximity you want to China at this point?
Yeah, so there's a couple schools of thoughts here. There's, of course, some that are not in the EU, like Serbia, that are very big fans. And, of course, Hungary is kind of the one that's been playing kind of both sides, both the EU side and the Chinese side. You have those that are kind of in the middle. Spain, which has been advocating a much closer relationship with China going forward. Of course, Spain is a bit in the doghouse in terms of the Europeans after last week's NATO meeting, where they have the only one basically not to commit to 5%. So maybe don't have as much pull as they have historically. The Germans have been a little bit hedged between these two sort of things. But I think that the main concern that you've had obviously the EV tariffs last year from the Europeans that were put into effect. You've had restrictions on Chinese goods in terms of the medical sector. The Chinese are, for their part, investigating pork and brandy imports into China. But as you can see on the screen right now, the trade surplus is going to be the main concern for the Europeans. And it's something that has ballooned out. You've now hit a record surplus between China and the European Union in the first 5 months of the year, in large part because of this big concern. You have these massive trade barriers now that exist between the United States and China. Where does that overcapacity go? It goes into a Europe that is open, that is rich, and that is going to be one of their main concerns. So likely they'll have, you know, some sort of support, but really it's not going to change primarily the dynamic that there is between the Europeans and the Chinese, and that is one that the Europeans are very concerned about and need to rebalance that relationship.
And we had something of an indicator of that when it comes to UK as well last week, with ONS data showing a huge tick up in exports from China to the UK. So we'll see if that's reflected in trade with Europe as well, and to what extent that provides and becomes a sticking point in these conversations. Oliver Crook, thank you very much indeed, giving us a nod as to what to think about for Wang Yi's visit, of course, the Foreign Minister of China on the ground in Europe this week, trying trying, of course, to deepen those trading relationships with European partners. Let's dig into what to expect on the markets now. Big week, of course, in terms of the countdown to that trade deadline on July the 9th, next week, of course. But before that, you get a raft of data as well. Joining me now is Tatjana Greil-Castro, co-head of public markets at Muzinich. Tatjana, thank you for joining us this morning. As we think about repricing around the Fed, we have non-farm payrolls, the labour market, the jobs data out of the US on Thursday of this week. Do you expect a number in terms of non-farm payrolls that could adjust, that could pull forward bets that maybe the Fed goes in July? There's now 20%, little higher than that, odds of a potential cut from the Fed in July. Is that something that markets should be taking more seriously?
Good morning, Tom. So I think the market is already expecting a somewhat weaker number in non-farm payrolls than we have seen in the past, but nonetheless, still nicely positive. I actually want to point to Jay Powell and his demeanor. So, when he spoke last week at the Senate committee, you could see that he's quite he seems to have lost a lot of weight. I think he's under a lot of strain. He clearly was late when he believed that inflation was transitory for too long and didn't raise interest rates, and then clearly had to raise interest rates significantly, and inflation ran away from him. But is he too late now too? I think that is for me more what I believe they're debating. Clearly there is also this debate about, his term is coming to an end. And even if he stays the full term, it's only going to be a few more months. And then clearly we're already focusing who is coming next. But I think for him is really, this idea, am I doing the right thing? And I think that strain is starting to show. I've not seen it like this before. And with that strain, I feel with that strain, he's more inclined to be more accommodative. And that is not even political, but I think the market has already turned also and said, actually, the interest rates are too high in the US. And so that's what we are looking at. Now, is it going to be July already or in September? That I think it would still be a surprise if they were to cut as early as July, just given if they say they rely on data and with all the changes that are now expected to come and to get a little bit more clarity. So no, we don't think that July will be the cut as yet. But if they do, then, I think that would just show that that they think they're too late and that they need to now catch up.
OK, so there is that view that maybe this is a Fed that is behind the curve. Tatjana, how do you position around that view if indeed that is what you buy into?
So, yes, we do think, clearly US rates have outperformed European rates over the last few months. And but we still see the room to have a bit more in the rally, and we like particularly the belly. So the long end is a different story because clearly there is fiscal discipline or the lack of fiscal discipline that plays into the long end. But when we look at, let's say, 7 year in, that is more affected by the Fed fund rate. Yes, we have now priced in a good few cuts, but there could be a few more coming. And so, yeah, we see there to be room for continued performance, and then that would also steepen the curve or further steepen the curve, particularly in the very short end where we still have an upward sloping curve, and that also shows that the market thinks that Fed fund rates are too high. So to the extent that you want to be positioned in the shorter part of the market where you don't have the volatility, then we see that. Equally, spreads are still wider in Europe, and because of the high currency hedging costs, European exposure is still attractive. We do believe with the Fed outcutting the ECB going forward, that those currency hedging costs will become lower. And then again, that would make US exposure more attractive, even for foreigners. So yeah, that's really where we see the value in adding some duration in the US, but still also taking advantage of the spread opportunity to themes that we see across Europe in different sectors.
in terms of lifting the hood on that view, then, Tatjana, where does it take you in terms of European credit?
So European autos was a good source of performance over the last 12 months. Clearly, they were under pressure with earnings, tariffs, Chinese competition, regulation. And so spreads widened significantly last summer. And some of the names have rallied back in, but there's still some opportunity there. We still like tier 2 bank paper that offers value. We also like, actually, this is, sort of a marginal spread pickup, but nonetheless, European periphery, where the sector composition is very defensive. But overall, European periphery companies are offering a wider spread than the broader market. So there is a good risk-reward balance there to be had. So those are the main sectors that we are looking at. And then there is always new opportunities that arise depending on what the narrative becomes. We have also been adding to European high yield.
OK, European high yields, European autos, still some opportunity there, and a look at peripheries, tier 2 bank paper as well. So some calls there from Tatjana Greil-Castro, co-head of public markets at Muzinich, with a focus as well on the belly of the curve in the US in terms of US Treasuries and 7 years, offering an opportunity at this point. That is the view from Tatjana Greil-Castro. Tatjana, thank you as ever for your take on these markets. Now, Ukraine says Russia fired a record 537 missiles and drones in massive attacks over the weekend. Kyiv claims that air defences repelled about 475 strikes, while Russia says all designated targets were hit in the large-scale strike. Let's bring in Bloomberg's Russia team leader, Tony Halpin. Tony, what do you make of these strikes, what it signals about Vladimir Putin's intentions, and what we know about the details of this attack over the weekend?
Yes, Tom. As you said, it was the largest strike of the war so far, and it's part of a pattern of recent weeks in which Russia has been unleashing aerial bombardments of Ukraine on a fairly regular basis. There is speculation about why it's doing that, whether it's to exhaust Ukraine's air defences, to make it easier for Putin to advance his forces on the ground. But one of the key situations here is that this is taking place at the same time as the US and Europe are trying to push Putin into agreeing to a ceasefire to take part in peace negotiations. Putin's answer has been very clear, this intensification of airstrikes with drones and missiles. Russia said that it struck infrastructure, in particular oil refineries, and it says it always targets military objects. But Ukraine has shown repeatedly, time and time again, that many of these missiles are hitting, in fact, civilian infrastructure and causing civilian casualties.
And meanwhile, on the ground in Russia, Tony, Vladimir Putin is tightening his grip, it seems, by expanding secrecy laws. To what extent does that tie into the conflict in Ukraine?
Yes, I mean, they're taking advantage, really, of the fact that, Russia's at war and the security state in Russia is tightening its control over information. So things like foreign policy, economic policy, international trade, and details of potential mobilization are now covered by secrecy laws, and anybody receiving that information and considered to be a threat to national security faces up to 8 years in prison. It's all part of the general crackdown within Russia on dissent and even mild criticism of the war, so that Putin continues to prosecute the war in Ukraine without really any opposition at home.
Bloomberg's Tony Halpin, thank you very much indeed with that important update, of course, in terms of the conflict in Ukraine, the attacks over the weekend, and some changes and adjustments in terms of security laws in Russia. Coming up, Europe basks in a heat wave with temperatures up to 10 degrees above the norm. We're going to look at the implications then for power grids and crops next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. A Chinese startup says orders have tripled after its humanoid robot came second in the Beijing Marathon's robotics showcase in April. The founder of Noetix Robotics dropped out of university 2 years ago to focus on the company. He's been speaking exclusively to Bloomberg's Annabelle Drulers about the domestic AI race and competition in the humanoid sector.
I don't think competition is the mainstream of the humanoid industry right now. We are all targeting at using humanoid robots to help us do houseworks in families. We're not doing that really well right now.
How far are we away from humanoids actually being used in household situations?
I cannot say after how many years we can see robots working in families or working in household situations, but I think the only thing or the main thing that is holding us from reaching that household humanoid robots is data. I think maybe 3 to 5 years we can see robots in families, because after 3 to 5 years at that time we have collected enough data for robots to work in families.
What's your prediction around how much humanoid robots for household settings will eventually cost?
I think it will be below $2,000 US.
When do we get to that $2,000 price point?
I think at that price, maybe we need to sell over a million robots annually to reach that price. I have no idea how long can we get to the situation that we can sell over a million robots in a year.
That was the founder of Noetix Robotics speaking to Bloomberg exclusively. Now, some other stories making the news this Monday. The US president says he has found a buyer for TikTok's US operations, but won't provide details for 2 weeks. Donald Trump told Fox News it was, quote, a group of very wealthy people. But the deal will need China's approval, and he expects President Xi Jinping to agree to it. Trump also said he would extend the deadline for ByteDance to sell its US TikTok operations for a third time. Bloomberg understands that Banca CF, an Italian financial services firm controlled by Elliott Management, is set to launch an offer for Banca Sistema. We're told the offer will consist of a mix of cash and shares. Banca Sistema focuses on financing and managing trade receivables owed by Italian local governments, mainly through factoring and credit management services. Now, temperatures across Western Europe are expected to be 10 degrees above the norm in coming days. The heatwave has been triggered by a blast of hotter air from North Africa. It's expected to stress power systems and has triggered health alerts. Joining me now is Joe Wirtz, Bloomberg's weather and climate reporter. Joe, thanks for joining us bright and early around the studio and around the desk. What can we expect then? It's going to be scorching, but there's going to be impacts for kind of on a human, personal level, but also on a company level and for the energy grid itself.
Yeah, that's right. So it's going to be super hot. It's already been super hot. Look, I mean, we get this high pressure system in. It's we not only have kind of a change of the winds that normally blow westerly that are now blowing up from the south, that we bring in this hot blast of air from North Africa that you mentioned. Also, the high pressure area is really clearing out all the clouds. So we've just got the sun just baking everything. So yeah, stress in the energy grids. We've got operators in France, that have warned that the rivers there might be getting warm. That's the same rivers that they rely on for cooling the nuclear plants there. So energy grid stress from that, plus increased cooling demand. And this thing is just sitting over Europe and just baking it.
How long is this expected to last, and what is the impact going to be on agriculture? Yeah,
we've already seen some impact from agriculture and farming. It's kind of a crucial time for some farmers in a lot of parts. We should see it here for the next couple days. Really, France is getting right in the bullseye of this heat dome effect. Temperatures there well north of 40 degrees. Wow. In some of the central areas. And, it's, you mentioned impact on human health, which is a big deal. We've got, heat health alerts basically covering parts of the UK, big areas of Spain, nearly all of France. And, the temperatures are going to be hot during the day, but they're also not going to cool off in a lot of these areas at night. That's makes for uncomfortable sleeping conditions for a lot of folks, but that also doesn't give folks, the relief, the cooling relief that you typically get at night, which is a major health risk for especially vulnerable people, kids, older folks, or folks with medical conditions.
Because we're talking in some areas of nighttime temperatures of 25 degrees.
Absolutely, even warmer in some areas too. Right. So just no relief at night from this. Luckily we've got a lower pressure system coming in that might that it should bring in a little stormier weather, some more clouds that should also clear out that high pressure and drop temperatures a little bit, but we got a couple more days of this in store.
Okay, a couple more days of these scorching temperatures at day and at night, with the implications there, of course, maybe some upside for the solar industry, but not much wind about right now. Joe, thank you very much indeed. You and the team will be busy, I suspect. Joe Wirtz, who is Bloomberg's weather and climate reporter. Joe, thank you for that update. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. Happy Monday. The S&P 500 is called higher again today. It punched through fresh record highs, of course. For the first time, we notched up a record on Friday. For the first time since February, closing back above 6,100. Futures again pointing higher for the S&P 500 stateside. Some of the catalysts, yes, the movements around trade, but also the pricing around the Federal Reserve. More than 60 basis points now being priced in for the Fed. The focus seems to be less on the tax bill that's working its way through the Senate and what that may mean for deficits stateside, and more on what is happening around the Fed and expectations that maybe even July possibly could be in play. So you got the S&P 500 back in expensive territory then, given the moves of last week and that fresh record high versus international stocks. And that breaks down, of course, the price to earnings metrics when it comes to the S&P 500. Let's flip the board and have a little look at what's happening in terms of tech, because on growth tech and with a forward look, interestingly, it is Europe and it is Asia that is looking to further growth versus the US. This has been broken out by our key analyst, of course, stateside, Gina Martin-Adams, and you can get that intelligence, that data on Bloomberg Intelligence. But she is diving deep into some of the themes around tech and looking at how actually Europe and Asia on forward growth metrics are looking to punch above what's been coming through from the US. So maybe counterintuitive to some looking at the tech sector. And let's flip the board quickly and look at the VIX, because volatility is very low. But is there a concern? This is flagged by our MLive team that maybe, given where we're at on the VIX, is there a bit of complacency in these markets? Volatility has come way off what we saw, of course, back in April. Does that point to a little bit of volatility in these markets, or at least complacency? The US Treasury Secretary Scott Bessent will be speaking to us. Stay with us. Open Traders up next. This is Bloomberg.